All right, so we're back for topic number two today with Joe Farrell from Strive for 25. And right now we're going to kind of focus a little bit about his rental properties in Florida and what he's dealing with from an insurance standpoint. Because I'm sure a lot of people have noticed, there's a lot of articles coming out about, like Florida is rocked by a home insurance crisis going on right now. People are, trying to sell or get out of these investment properties that they have, or even primary residence because the insurance or cost is getting too high for them. So, Joe, welcome. Like, let's talk about this a little bit.
Yeah. So, I mean, it's a fact. Insurance is just going exponential in Florida. And me personally, I'll give you some actual numbers. So, the house that I have in Florida, it's a couple rows from the beach. So, it's a neighborhood that's got a private access to the beach. So, it's not beachfront, it's like the next row back. So, when I bought it in 2021, the insurance cost was like 9 grand. And it's a house that is 5,500 square feet. So it's larger than probably the average. At this point in time, the renewal ended up being like $22,000. So that's almost triple, double. I don't know what's the math on that.
Wait, 22,000?
Yeah,
Holy moly.
yeah. So like that's just my personal example, but every other situation is going to have some type of factor of one or two, double, triple of insurance going up. And I'm not an insurance expert, but obviously you're going to have weather and hurricane and all these things are happening. And so you're going to have, roof replacements and all these things are going in. But at the end of the day, there's some other factors that are going into it as well that we can talk about.
Yeah, I'm curious though. So, how long have you had this property, and maybe give them an idea of kind of maybe what was the insurance when you first got it?
Yeah. So I've had it for 2.5 years. So got it in the beginning of 21. And so that policy was like $8,800 the first policy.
And so, have you experienced any hurricanes in your area? I guess. I mean, or is it just kind of,
So this is in Destin, Florida, the Panhandle. So there haven't been any hurricanes there specifically. Panama City got hit. I think maybe 2020 or 20. I forget what year it was. They got hit with some storms and got hit. But that specific area, since I've owned, hasn't had any major situation. I haven't had any claims come through on my area, on my property. But there have been other, like I think what Fort, no, so it's Naples, maybe. I forget which area down on the left coast, down south got hit a couple, maybe a year and a half ago. So the whole state, companies are pulling out of doing insurance down there. And there's a couple things. So reinsurance is what an insurance company does. They go get insurance on major claims through other big carriers. So that reinsurance cost has gone up. And so the other thing too is that Florida, it is very easy to sue somebody. So it's a very litigious state. So if something happens with your house, and again, I am not an expert in this at all. I just know that the amount of lawsuits on insurance to insurance carriers is one of the highest in the country. In the laws in Florida allow for that ease to be able to sue your insurance company for certain things or whatever. So that's another big reason of costs going up and why companies are getting out. And on the flip side of that, not to get any type of political stuff, but I know that there's some things going on within some of the state legislator and Congress to try to be able to change some of those laws for better or for worse. So that's stuff that's going to be happening, I think, maybe down the road, or could be happening down the road. So there's just so much that goes into it, and all their algorithms.
So, how, as an investor, do you deal with something like this super, I guess, rapid increase in your cost of insurance? Have you been able to shop around, or it's,
There's no shopping. There's no shopping.
yeah.
There's not many options, unfortunately. And me personally, that's the size of the house also limits the options too. But yeah, the amount of options for somebody to count in that median average level, there's just definitely not as many as there was before.
So, do you still cash flow on this property? Like, were your numbers conservative enough to handle this increase in your cost of insurance?
Um, Okay. This is such an important question that goes into more things. So, I bought it in 21, right? My rates were from 2021. Now I did a commercial loan. So a commercial loan, a 5-year balloon, 20-year amortization is a type of loan that I did, which is different than your typical conventional loan that may be a 30-year fix and in your personal name. This is in my LLC. And that's a whole different conversation of why I chose to do it that way. So 2022 is kind of the dividing line of interest rates. So on the mortgage side of things, we were locking rates in the low threes. And then as 2022 began, rates started going up. And then by May, we were in the mid fives. By June, we were in the mid sixes. And so people that bought in 2022 are going to have higher rates than the threes and twos we saw in 2020 and 2021. And as prices were going up and rates were going up, those are I think that 22 and beyond are the people that are Airbnbs or rentals. They're the ones that are going to be most affected by the rising insurance. Taxes are going up. If you have an Airbnb, depending on your location and where you are, you're maybe seeing some declines in occupancy and rents. Like my property, the rents per night have gone up every year. Occupancy, I would say, is last half of this year is less than it had been in previous years, but occupancy up to this point has been pretty strong for my property personally. So cash flow wise, we're doing okay.
So still, this is a short-term rental. You're doing it as a short-term rental.
Yep.
And are you self-managing it yourself, or you have someone there for you?
Yeah. This is good. This is through a management company.
Okay. So, I mean, I guess if things were getting tight as far as cash flow, you could always try to cut out the middle guy and, do it manage it yourself. Yeah. So I think that's the important thing with real estate. Also, you have so many options to kind of maneuver around and figure out, kind of almost change the terms a little bit in a way. So that's why sometimes you can refinance, do HELOC, maybe self-manage. But you have a lot of strategies where you can maybe cut costs to kind of weather the storm and kind of just, hang in there until maybe things get better. But man, that's I don't know if I'd be able to handle that type of increase in insurance so quickly. I mean, that's amazing that property still cash flows.
Yeah. You're right. It happens so fast. And that's the thing that most people probably aren't able to weather that storm, and the Florida beach destination, short-term rental platform or geography is very seasonal. So you have your kind of March through July is peak, August is solid, trails off, September trails off, and then October through February is pretty much hit or miss. Maybe you have 1 to 2s here at the holidays. You have a week or two. So it's like, me personally, it's like, okay, what can I do to control my own destiny on this? And so that's why we've been kind of building out this opportunity to be able to do some real estate investing workshops. So like, we have a few groups that are going to be coming down for a 3-day real estate investment workshop, October and beyond. And it's hey, mix a vacation with some education type of stuff. And the thing that I think is so cool about this is that we have a couple of families that are coming down and a couple other groups that are kind of friends or work groups and, adults that are going to be able to learn about real estate and tax strategies and short-term, long-term, all this different stuff. But the family stuff is stuff that gets me excited because, when you've got some teenagers that don't know anything about finances, I didn't know. My first job out of college was at City Mortgage doing mortgages. I had an econ degree. I was a numbers guy. I didn't know what a mortgage was. I didn't know anything about it. Right. And that was my first job. So like, if you're talking to a teenager, they don't need to know about finances or real estate or mortgages or whatever. But if they start to kind of get exposed to it at a younger age and start to just kind of understand what the formula is, because if you were to kind of give the formula to success in real estate in a couple sentences, how would you describe it for in your world or for you personally?
The earlier you start, the better. It's very simple, I guess is the easiest way to put it. It's simple math, but it takes a lot of work. It is not as easy as a lot of people make it. This is a lot more than a few words, but it's not as hard, I guess, from a calculation standpoint as you may think. It's kind of basic math, I guess, to really come to if a property works or if it makes sense, or kind of calculating your payment. It's not this outrageous calculation that you have to know how to figure out, what your payment might be, or if this property is a good investment.
So I'm going to ask you a personal question, which you may or may not want to answer. So the portfolio that you've built in Pittsburgh in 10 years or 20 years, whatever time frame you want to give, are you going to be above or below $1 million in net worth just on that portfolio alone?
I'll be above. Yeah.
So start early, let time work for you. It's a pathway to be a millionaire.
Oh yeah. Yeah. I think what like we kind of touched on it a little bit is you have so many options, right? So if your goal is to get to 100 properties, then, that's great. But along the way, things can change. And I think that's where a lot of people start, right? They get in and they're like, I want this huge portfolio. I want, 1,000 units, and I want all this cash flow and all this money. And then you start realizing like, it's a lot of work to manage 1,000 properties or whatnot, even if you have a property manager. And then you start kind of maybe refiguring out your goals and be like, hey, maybe I have 40 properties, and let's figure out which is the 20 best performing ones. And now let's, maybe sell off some to pay down debt on these other properties, or, kind of take some chips off the table, or, limit your risk out there. But now you have maybe 20 paid off properties, all cash flowing, and you can sleep at night because you don't have mortgages on them and you have less risk. So I think that's the great thing about real estate is there's just so many options, and where you're at in life, you can kind of strategize to what works best for you and how much risk you want to take.
Yeah. I love that. You said sell off a couple, pay them off free and clear, and sleep better at night.
Yeah. Well, I don't want to take 100% credit for that. I mean, that's kind of where I've turned my focus, is where at first, like I said, when I first started, I wanted this huge portfolio, but along the way, I'm like, yeah, maybe that's not the best plan for, especially I'm on the older side. But I don't know if you're familiar with Coach Carson, Chad Carson. He's on YouTube, social media, but he same thing. He had a book just come out on Bigger Pockets, but that's his thing, is the mighty investor, small and mighty investor, where it doesn't take a huge portfolio to make a difference in your life. And you could have, even like Michael Zuber from one rental at a time, he really focuses on just getting 4 rental properties can be a life changer for you. And I get it. Even like I said, I wanted to leverage and have mortgages and say, I'm going to keep scaling. But there comes a point where you're like, what? Maybe I'm happy with what I have, and like I said, maybe let's sell off a few to pay certain ones down, and now we just have a free and clear portfolio, and you have all the the chips are taken off the table, and now you just you reduce your risk a lot.
Totally. And why, right? Like that's the one of the things that you and I talk about a lot, is like, well, why is that important? What does that do? In terms of life, like, what does that mean? What does that mean to you?
Yeah, well, for me, it's more I can actually probably enjoy what my true vision is, retire early, be traveling, hanging out with my son, and just doing things in life that I enjoy. And like for you, you have 2 young twins. I'm sure your vision is not, I want to be managing 1,000 rental units or Airbnbs. And because it does take time. So for you, I'm sure like you're probably considering, I want to scale back or, reduce my risk and just enjoy the passive income that's coming in. And like you said, you can just sleep well at night.
Yep. Yeah. I mean, that's definitely a goal of mine at some point, but like that journey, right? You got to get to a certain point, and then you can kind of reevaluate and see where you want to go. And it's like, that 15-year-old who may be exposed to some of these principles about real estate and time and compounding and how to get in the game. And it's like, you know, if you're 23, 24, you've got a job making okay money and you've got some savings put away and you buy that first house, there's so much content out there about the house hack of, hey, you buy a multifamily, use FHA, 3.5% down, live in one unit, rent out the other ones, and, start to build your portfolio early on. It's like the National Association of Realtors' latest data shows that the average age of a first-time home buyer is 36 or 35, which 4 years ago, just a few years ago, it was in the late 20s, 27, 28. It's like, if you get in the game at 24, 25, you've got a 10-year head start on everybody else who maybe just getting in 35. So it's like, okay, well then if you're 25, why are you able to get into the game versus somebody who's getting in later? Well, the biggest limiting factor that I see for people getting in the game is having the money for down payment. When I talk about getting pre-approved, it's like, okay, we're going to look at three things: income, credit, and assets. So 1 and 2, okay, most people can kind of either you have income or you don't, right? Or hire enough income. Credit, you can work on, build. Savings, that's the hard part. That's the hardest part, of being able to put money away, especially in this rising inflation environment. But if you can figure out how to save money, and get in the game early, you got a 10-year head start of building equity. Just the opportunities are endless. And that's one of the things we talk about in the book. You mentioned the 4 properties. It's cool that he talks about that, because that's kind of something that I talk about in the book, and give an example of somebody stair-stepping their way up and buying a primary residence, living in it for a year or two, saving up, buy the next one, a slight upgrade, and illustrate an example of somebody buying 4 properties, putting $60K down of total down payment money in over 8 years, and then building a multi-million-dollar portfolio.
Yeah, definitely. I think there's not enough people that talk about that, where just getting a few rental properties can change your retirement plans, and just sets up, your future generation or your kids and what for their future. And, hopefully they keep progressing on that. But it starts, like you're saying, it starts with 1, and you just stair step it up, and it just keeps growing. And that's how you kind of, this snowballs. And, I kind of also want to talk a little bit about the insurance still yet is,
Sorry.
are you,
Yeah.
no, but are you still actively looking for other investments in Florida because of what's going on with the insurance?
That's a great question. So yes and no, depending on how you define it. So I am actively participating in Florida, not on the next acquisition, but maintaining. So I've got a land development project in Santa Rosa Beach that we've got a piece of land we're going to be building some houses on, a subdivision. So that part of it is still in process. We're waiting for utilities to come through. So I believe in Florida. I believe in the long-term, prospects there. The insurance side of things, the interest rate side of things, I believe hopefully will be a temporary thing. Rate wise, I honestly, I think by next year, maybe even this time, you may see rates probably in the 5s, low 5s, mid 5s, somewhere in the 5s, I think, because inflation has come down. Like the last reading was at 3%. The Fed's target is 2%. So it's just a matter of time until things start to unwind back down. On the insurance side of things, I don't know. I mean, I feel like they have to come down, especially some of these, litigation stuff can maybe work itself out in terms of how law works. But I hope it comes down, but I don't know.
Yeah, well, I mean, like I try to advise people or tell people is, it's just another line item, you have to calculate in when you're trying to run your numbers. And, just know that going into it, that, Florida has, high insurance, and you just got to put that in your calculations. And that's kind of how you're going to make your decision. And, every market has these little things that you got to factor in. Like I always tell people, like Pennsylvania has, high transfer title fees. So it's not as easy to, purchase in your name. Then you're going to switch it to an LLC, or then if you're going to, if you want to get a HELOC, then you're going to take it out of the LLC, put it in your name. So, you're going to pay a lot of fees that way. And also, certain areas in Pennsylvania, and Pittsburgh is one of them, they have some higher, school taxes in certain areas. And, that's something that, you just got to be aware of it. Whatever market you're looking in, that there's these little nuances that you got to know about, and that's why it's so important. And networking and talking to other investors in that market that you're interested in getting into. But I kind of also want to touch that. I heard you talking about it, about how you're having events or things in Florida. Do you kind of provide the housing for these people
Oh,
that are
yeah.
coming out?
Well, yeah, I mean, that's kind of the thing. It's like, okay, I've got this asset that, in theory is not being utilized in its fullest form in the off-peak season. So it's like, okay, well, hey, come down, stay in the house, bring 15, 20, you can sleep 30 people if you assume bunks. Mix vacation with some life-changing education, financial freedom education. Because that's what it's all about. If you want to be financially free and you don't want to be relying on your W-2 job, which is exactly what you and I talked about, was your purpose and why of getting into real estate in the beginning. If you don't want to rely on your W-2 and your 401k to survive, real estate is probably the best way for the everyday person to get in the game. Come down, learn about it, combine it with
Yeah.
vacation. And that's the thing that some of the I'm going through this platform with ClickFunnels right now, Russell Brunson, to be able to create some ad content, some video content. And one of the messages that we're talking about is like, hey, you hear an inspirational speech, right? Talking about whatever it may be that gets you excited in the moment. It's like, okay, cool. But what about tomorrow? What about the next day? What about a month from now? Is that still going to be an energy inside you that's pushing you and inspiring you? And that also kind of dovetails back into the book. It's like, how do you get inspired and keep that energy going? And that kind of comes back into taking your vision and programming it into your subconscious brain every single day. So, but pulling in all five senses, coming down to a property like that, seeing what it's like to be able to have a short-term rental on the beach, learning about this stuff. This is part of my why. I want to be able to have real estate, have the ability to go on vacation and have it be my property. Bring all five senses into the equation and learning this stuff, feeling and seeing it, seeing the ocean, seeing the wind coming through, like all that stuff, part of the package, right? Like, so that's something that get that the content, the videos, the ads are going to be coming soon.
I love it. Well, this is a great way for me to start my morning. We started at 5 o'clock, Hawaii time, and I love it. Like I said, I like getting things done in the morning, and now my whole day, I feel like I've accomplished something. But this has been great, and we'll try to do this. Like I said, we're trying to make a weekly thing. Oh, go ahead.
Do you have your bulletproof coffee around you? What do you got rocking?
I am doing the bulletproof coffee again. I don't always use the bulletproof brand, but I do make my bulletproof coffee in the mornings again. And if people aren't familiar with that, it's coffee mixed with either butter or grass-fed butter or ghee or like coconut oil, but you're basically adding fat to your coffee to kind of I guess activate your brain and your metabolism. And I forget the host. I mean, like I said, I was very big into this maybe like 10 years ago, and then my son was born, and I was like, I don't want to blend up coffee in the morning and wake up people. But so yeah, have you tried it?
Not yet. I need to.
I was never a coffee person, a coffee drinker. So maybe, for me, drinking coffee with butter or fat in it, I didn't really know what, I guess maybe coffee's supposed to taste like or how people drink it. So for me, it was just like, oh, I like this. But maybe if you're a big coffee drinker, drinking it this way, you'll be like, oh, I don't like this taste or whatnot. But I feel better on it. I feel it's just, like you say, it's part of my routine, and maybe that's it. Getting my coffee maker ready the night before and getting it all set up, and so I work out early in the morning too. So after I work out, I turn it on, go shower and make my coffee, and that's how my day starts.
Okay, maybe we can do a little bit of a foodie episode sometime down the road, because
Oh yeah.
I just changed my diet. Like, I just realized my body doesn't really digest carbs very well. So I just changed my entire diet. And like in the last 2 weeks, I've noticed just a massive difference.
Oh yeah,
So
definitely. I mean, like I said, I probably could have bought a house in Missouri with the amount of gym equipment I have in my garage. And that that is one of the, I tell people all my mistakes. I tell them it's not, I've done all the stupid things, racked up credit card debt. I've bought things that I didn't really need. I was just spending money foolishly. And, like I have this, and I mean, I enjoy having a gym in my garage. It's super convenient. I like it. But now it's also like, I'm thinking about renting out my place, and I'm just like, how am I going to move all this stuff? How am I going to get rid of it? And, of course, nobody's going to pay the same that I paid for it. Right. So it's basically like a depreciating toy, I guess.
So like that stuff, right? It's there. You rent out the place. So then what do you do with it?
Well, that's
Leave
why
it there, or storage, or throw it away.
I'm gonna. Well, my plan is to probably move back in with my parents because they're getting old, and I just like it's gonna happen at some point. So I figure I might as well just get the ball rolling, and I'm kind of I'll probably move some of it to the garage at their place, but there's just way too much stuff where I can't take all of it. So, I'm probably gonna have to just sell it off or give stuff away, or because I don't want to leave it here because then it's like I don't want whoever I rent it out to, then it might be like they may want to use the garage, right, to park their car instead of having a gym in here, and then I don't want them tripping over, I don't want any liability, like, oh, they tripped over this dumbbell and, fell and hit their head or something. So I'd rather just empty out the garage and let them figure out what they want to do with it. But yeah, we can if you have a topic for next week, we can talk about, you can send the topic over to me and I can
Cool.
do some research, and yeah, we can have fun with this.
Cool. I'm down.
All right, so we'll end it there, and hopefully people got some good information about what's going on in Florida, the high cost of insurance, and just how you kind of got to just add it into your spreadsheet or expect these type of things to possibly happen. And but you have a lot of
I just realized this picture's from Hawaii.
yeah, I think you mentioned that. I mean, did you Photoshop yourself in there?
No. It's 2017. Yeah.
Well, I thought you were coming here because the Warriors failed and didn't make it to the finals, and you were supposed to do some kind of event here or something.
I mean, all you had to do is say yes. All you had to do is say yes. I take your bet. There was no acknowledgement on the bet. Otherwise, we'd be planning an event.
Well, I mean, like I said, I'd be happy if they won. Like I was kind of hoping they. I mean, I do like Steph Curry, but the Nuggets are just a well-oiled machine. They're gonna be, when your superstar is kind of just this unselfish, dominant big man that can, I don't know. He's
that guy.
Yeah,
That guy, man.
yeah.
His interviews are just hilarious. That's a whole nother topic.
Yeah. The funny thing is so I play fantasy sport, like fantasy baseball, football. I play fantasy basketball. I remember uh probably like 5 years ago, it was him, and the Nuggets also had Jusuf Nurkic, I believe. He's with the Trail.
Yeah.
They had both of those guys, and it was kind of like they just didn't know who was going to be the guy, and but finally they traded Nurkic, and yeah, Jokic just he just blossomed. But the funny thing, he was kind of just pudgy European guy, and you just didn't really know he was going to turn into this kind of player. But
Yeah.
I don't know how long you followed basketball, but do you remember Arvydas Sabonis?
Oh yeah. Yeah. His son's in the league. Yeah.
Yeah. So I think, they always say, oh, we kind of missed Arvydas. He was just this great international player, but by the time he came to the US or NBA, he was already on the downside of his career. But I think like in his prime, he was probably, Jokic before he was Jokic. Like he was just amazing player that could pass, score. He's just super high IQ. But yeah, unfortunately, I mean, he was still good when he got here, but he just wasn't that dominant.
Yeah.
His knee, he was just getting old, and
Because
his
he was
body.
on the Kings, right? At the later part of his career?
I know he
Or
was
no?
primarily with the Trailblazers. Also, I don't.
Yeah.
Yeah, the son is with the Kings
I'm
now.
thinking of, am I thinking of Vlade Divac? Was
May
Divac
Oh yeah, well,
on the Kings? He was on a lot
Vlade
of
was
teams,
with
but
the Kings, but Vlade came here young. He kind of got when he came here, he was already on the young side. But
yeah.
Arvydas Sabonis was just this. Yeah, his knees were just gone by the time he got here. But he was still a solid big man. Like he just couldn't play like a lot of minutes. And but supposedly, yeah, overseas he was just this amazing basketball player. And I think that's kind of he would have been the Jokic before, when he was a
Yeah.
Jokic. But
You know what's so interesting is that, like, you have your Steph Curry, phenomenon, as he 2015 was when they won that first championship and spread the court out, create space, get to the rim, shoot from 30,000 feet away or whatever it is. And everyone, Damian Lillard followed, all these people are following suit. You have the scoring has risen from like 102 points a game. Now it's like 115 points a game. All this, the game has changed so much in the last 20 years, 15, 7 years, really, 7 years. And then you look at the last, like this past year, the teams that got to the final four of their own conference and the semifinals, all of them had dominant big men. It wasn't the Warriors. It wasn't, these 3-point shooting teams. It was all teams that had big men. And I just think it's so interesting how the game continues to
who's I'm
cycle
trying
in.
to
And
trying to think who's the
you got Lakers and the Nuggets. So you got Anthony Davis. You got Sixers, Embiid,
oh
and
yeah,
the Heat. Which I guess if you take their big man, which is
Adebayo.
out of
Yeah,
bio, he's not like huge, but he's still a good athletic big man.
yeah.
Draymond is not really a big
Well,
man. He's 6'6", so he's not really a big man. But
it's a different type of big man. It's not
yeah,
that
yeah,
plotting. And
yeah.
that's why I tell everyone I think Hakeem Olajuwon would be unstoppable in this era of basketball. Like I think he would just nobody would be able to come close to him.
His footwork, when they were winning those championships in 94,
Yeah,
95, his footwork, oh my God.
yeah. And he was a good passer, defender. He could shoot. It's just he that wasn't the way the basketball NBA was played back then.
Yeah.
But he could shoot and everything. I think he would, the way the game is played today, I think he would just be amazing and unstoppable. But yeah, we can chat more about this next week, hopefully. Get my morning started off right again sometime next week.
Cool.
And maybe you can come up with the topics and then yeah, we'll do this again, man.
Awesome. All
All
right.
right, thanks, Joe.
Have a good Friday.
Bye, man. You too.
Bye.